You open your mailbox and find an envelope from the Department of the Treasury. Inside is a demand for payment. For most people, the immediate reaction is sheer panic, a sudden fear that the IRS is going to drain your bank account by tomorrow morning. Take a breath. The IRS cannot legally seize your assets today. They operate as a rigid bureaucracy, and federal law requires them to follow a strict, mandatory sequence of written warnings before they can touch your money or property. To stop the collection process, you must figure out exactly where you are inside this sequence. Pinpointing your exact notice tells you how much time you have left to freeze the escalating penalties and protect your accounts from a levy. Mapping the rigid procedural rules the IRS is forced to follow reveals the specific timeline available to protect your assets. Look at the top right corner of the letter you received. You will see a specific alphanumeric code printed there. This is your diagnostic tool. If your letter says CP504, CP501, or CP503, you are in the early warning stages. These are standard bills and reminders that you have an unpaid balance. You have time here, but it comes at a cost. During these early stages, failure to pay penalties are quietly compounding at a rate of 0.5% per month, plus daily interest. The process shifts gears if you see the code CP504. This is a notice of intent to levy. It serves as your final warning before the IRS targets and seizes your state tax refund to cover the debt. You can map this timeline. A green CP504 becomes a yellow CP501, then an orange CP503, finally hitting the red CP504. While early stages give you months to respond, hitting this red marker means the system is preparing active enforcement. Every letter before the red zone gives you the luxury of time, but once that CP504 arrives, the window for passive planning has officially closed. If you don't resolve the balance after a CP504, the IRS sends the ultimate threat, an LT11 or Letter 1058. This provides legal authorization to raid bank accounts and garnish wages. From the date printed here, you have a strict 30-day deadline to respond. By this stage, the math has escalated. Because past notices went unresolved, your original unpaid amount is now carrying months of compounded penalties and interest. For severely delinquent debts, typically those over $66,000, this stage also triggers a non-financial consequence. The State Department can block or revoke your passport. The 1058 functions as a legal trigger, authorizing the IRS to systematically strip away your financial autonomy if ignored past day 30. Before you pay anything, you must establish a baseline rule of defense. Never assume the IRS algorithm's math is infallible. Internal processing delays often cause the system to generate an automated CP14 notice, even if you mailed your check on time. Pull your personal bank statements, your canceled checks, or your online IRS transcripts. Cross-reference their stated balance against your actual payment history. For early notices, you have a strict 60-day window to present this proof, and you must dispute their math before the system escalates the claim. Verifying the data up front is your primary firewall. It prevents you from paying thousands of dollars in artificial, system-generated penalties. Now we execute a response. Depending on which letter you received, you have one of two specific paths to forcefully halt the collection machine. Path A is for early-stage notices. You agree with the balance, but you cannot pay it all today. If your liability is under $50,000, secure an online payment agreement. Go to irs.gov, select the Pay portal, and set up a monthly installment plan. Establishing this plan, or filing for currently not collectible status for extreme hardship, immediately suspends automated threat escalation. Path B is your absolute emergency protocol. You use this if you are holding an LT11 or Letter 1058. You need to immediately file Form 12153, the request for a collection due process hearing. Submitting this exact form within your 30-day window invokes your legal rights. It legally blocks the IRS from seizing your property while your case is under review. Taking either of these actions reverses the dynamic. You use their own procedural rules to force a pause in their operations. By engaging the proper channels and taking these steps, the immediate threat of a sudden asset seizure is completely neutralized. From here on, keep a physical, auditable trail. Make copies of every form you submit and send everything via certified mail. If your debt is massive or too complex to navigate alone, this is the time to bring in a licensed enrolled agent or tax attorney. They can negotiate advanced resolutions, like an offer in compromise, to settle the debt for less than you owe. Understanding the architecture of the IRS collection sequence reveals that even the most intimidating tax debt is governed by a